This video will walk you through the solution to exercise 915, focusing on impairment of property, plant, and equipment. Here's the data for our problem. Reyes Technologies has defined its computer repair division as a cash-generating unit under IFRS. The company reported the following carrying amounts for this division at December 31st, 2025. Computers are carried at $55,000, furniture at $27,000, and equipment at $13,000. The computer repair division is being assessed for impairment. At December 31st, 2025, the division's value in use is $80,000. There are four requirements for this problem, so we'll begin with requirement A, where we want to determine if the computer division is impaired, assuming that none of the individual assets has a determinable recoverable amount. When testing for impairment under IFRS, we have to compare the carrying value of the cash generating unit to its recoverable amount. In this case, the carrying value of the entire division is the sum of all the carrying values of the computer, furniture, and equipment, adding up to $95,000. The recoverable amount is based on the higher of either the value in use, or VIU, or the fair value less cost to sell. In this case, we know that the value in use is $80,000. However, the fair value less cost to sell is undeterminable. Therefore, we're going to have to use the VIU as our comparative, and therefore, when subtracting the $80,000 value in use from the $95,000 carrying value, we have an excess of carrying value over the recoverable amount of $15,000, which means that our cash generating unit is impaired. The next question becomes, how do we allocate that impairment to the different classes of assets? Well, that's actually pretty easy. All we do is allocate that $15,000 proportionately to the carrying values of the assets. So if the sum of the carrying values is $95,000, and the computers have a carrying value of $55,000, then the proportionate loss allocated to computers will be 55 out of 95, which ends up being 8,684. The furniture will receive 4,263, allocated as 27 over 95, and the equipment will get the remaining $2,053 based on the equipment's carrying value of $13,000 over the total carrying value of $95,000. Requirement B asks us to prepare the journal entry to record the impairment from Part A, if any. Based on the work we just did, we saw that there was impairment. So what we're going to do is debit a loss on impairment account for the entire $15,000, and then credit accumulated impairment loss accounts for the computers for $8,684, furniture $4,263, and equipment of $2,053. And that's a journal entry. Now under requirement C, where we're asked to determine if the computer repair division is impaired, assuming that the computers have a fair value less cost to sell of $60,000, but that none of the other assets have a determinable recoverable amount. So again, we're going to compare the carrying value of the division, but this time we'll break it out into computers, furniture, and equipment. They all add up to $95,000 based on $55,000 for computers, $27,000 for furniture, and $13,000 for equipment. Again, we would determine the recoverable amount to be the higher of either the value in use, which is $80,000 in this case, or the fair value less cost to sell. Now we'll break those out individually. The computers have a fair value less cost to sell of $60,000, but the furniture and the equipment are undeterminable. So the $80,000 value in use exceeds the $60,000 fair value less cost to sell. That's what we will use as the recoverable amount. We still have a $15,000 excess of carrying value or recoverable amount, which means we still have impairment. The question now becomes, how do we allocate that $15,000 amongst the various assets within the cash generating unit? Well, the first thing to note here is that when we just look at the computers, we see that the carrying value of the computers is less than the fair value less cost to sell, or that the fair value less cost to sell is greater than the carrying value. Therefore, the computers are not impaired. This $15,000 impairment then relates to the equipment and furniture only. So what we're going to do is prorate the impairment loss of $15,000, this time between the furniture and equipment, rather than all three of the asset categories within the cash generating unit. So if the furniture has a carrying value of $27,000 and equipment $13,000, that's a total of $40,000 for the two assets. And those are the values which we'll use to prorate the impairment loss. So if we take the $15,000 impairment, multiply by 27 out of 40 for furniture, that results in an allocation of $10,125. The rest, $4,875, will be allocated to the equipment, and that's based on 13 out of 40, or $13,000 in its carrying value over the total carrying value of the two assets of $40,000. Now on to our last requirement D, which asks us to repeat requirement C, but this time assuming that the computer's fair value less cost to sell is $50,000. So I'll show the entire comparison this time. And we'll notice here that the only thing that changes is the computer's fair value less cost to sell. In the previous scenario, it was $60,000. Now it's $50,000. Everything else is the same. The divisional carrying value is $95,000, which is the sum of the three asset classes. The value in use is still $80,000, and the fair value less cost to sell of the determinable assets is $50,000. The recoverable amount we're going to use is the higher of the two numbers, the value in use or the fair value less cost to sell, which is $80,000. So we still end up with an impairment or excess of carrying value over the recoverable amount of $15,000. But again, notice that the fair value less cost to sell of the computers is $50,000, which is less than the carrying value. So therefore, the computers are impaired in this case by $5,000, the difference between the $55,000 carrying value and the $50,000 fair value less cost to sell. So to allocate the $15,000 impairment loss, we will allocate the fixed amount of $5,000 of the $15,000 impairment loss to the computers. The rest will be allocated between the furniture and the equipment, which don't have determinable recoverable amounts. So the remaining amount to be allocated of the $15,000 impairment loss is $10,000, of which $6,750 will be allocated to the furniture based on its $27,000 carrying value divided by the sum of the two assets that don't have determinable values. So the furniture plus the equipment add up to $40,000. So $10,000 in remaining impairment loss times $27,000 over $40,000 is $6,750, and the remainder $3,250 is allocated to the equipment based on $10,000 times 13 out of 40. And that's it. We're done the problem.